Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
The universe is vast, indifferent, and mostly silent, except when you're trying to sleep, at which point it becomes deeply philosophical. Experience is what you get when enthusiasm outruns judgment and comes back limping. The world makes more sense when you stop insisting it should. The plan was solid until execution arrived with its usual creative differences. The problem with having all the answers is that the questions keep changing out of spite.
The United States now makes up 60% plus of global market capitalization. That's not dominance, that's a near monopoly with a better PR. So what's driving it? Tech scale and profits. The world's biggest companies, think AI platforms, mega caps, are overwhelmingly American, pulling capital like a magnet. Now could this reverse? Maybe. Europe looks cheaper, EM has growth, and flows do rotate. But structurally, the US still has the earnings engine and liquidity depth others are chasing. So this is not just a blip, it's a lead built on fundamentals, at least for now. India just doubled Russian oil imports to 5.8 billion euros a month. And yes, the math is simple. Buy discounted crude, protect margins, and keep inflation in check. But this isn't just about cheap barrels, it's a careful balancing act. Energy security versus geopolitical optics. You save on cost, but you lean harder into one supplier in a very divided world. For markets, it helps a current account for now, but also ties India closer to volatile global fault lines. Smart trade? Absolutely. Risk-free? Not quite. M&A and private equity values just fell 57% quarter on quarter. But here's the twist. Deal count is still holding up. So activity isn't dead, the big money just did not show up. Translation, lots of small and mid-sized deals, but no blockbuster checks. Blame global uncertainty, tariffs, and currency swings. No one wants to overpay when the ground keeps moving. This is not a collapse, it's caution. Capital is still in the room, just sitting on its hands. When the macro fog lifts, the big deals usually follow. Barely open, and Navi Mumbai Airport is already India's 9th busiest. That's less a debut, more a sprint finish. So what's happening here? Demand did not wait. Mumbai's congestion was a bottleneck, and the moment capacity showed up, traffic rushed in like it had been queuing up for years. This isn't just aviation, it's a signal of urban pressure meeting infrastructure catching up. Build it, and in India, they don't just come, they overbook. And with plans to scale up massively, this is less about rankings today and more about future capacity unlocking growth. While the world debates energy security, China just quietly built the factory for it. Solar, wind, battery. They are not leading, they're lapping the field. This is not accidental. Scale, subsidies, and supply chains all stitched together. If oil was geopolitics 1.0, green tech is clearly version 2.0. China wrote most of the code. For everyone else, this creates a dilemma. Go green, but stay dependent. Or spend big to catch up. Energy transition, yes. Supply chain transition, not quite. A $75 billion IPO? That's not a listing, that's a gravity test. If SpaceX pulls it off, it would dwarf Saudi Aramco's $25.6 billion record. $25.6 billion record. This isn't just about rockets. It's Starlink, data, defense, AI adjacency, all bundled into one very ambitious narrative. Investors aren't just buying earnings, they're buying optionality on the future. The frenzy makes sense. Rare asset, massive scale, and a founder who bends headlines. The risk, when storytelling gets orbital, valuations sometimes forget gravity excess.